And China's economy is paying the price now for the government's COVID-0 policy, with industrial output and consumer spending sliding to the worst levels since the pandemic began, and analysts warning of no quick recovery. Joining us now to break down the numbers then is our chief Asia economics correspondent, Enda Curran. And it looks like economists got it very wrong once again with their estimates on China. Were they underestimating then the impact of these lockdowns that we've seen in places like Shanghai, but also in the northeast in Jilin?
That's right, Tom. It does look like these lockdowns and other measures are having a much bigger impact than was expected. I think there were two takeouts from today's numbers. You just mentioned there was weakness across the board in terms of industrial output and investment figures, but the two that stand out were retail sales. That fell 11.1% on month. That's a huge fall for any economy. And on the jobless side of things, there's a surveyed jobless rate, which captures a section of the jobs market at least, and that rose to 6.1%. But the big takeaway from that was within those numbers, youth unemployment actually hit a record, that 16 to 24-year-old age bracket. And I think that's adding this idea that there's now a sense of urgency in China in terms of putting a floor under the economy. Now, economists are asking, does this mark the worst of it? There's some good news coming out of Shanghai today, with the vice mayor up there kind of mapping a roadmap for how they can pull out of this. And we know that shops and barbers and drugstores are slowly reopening up there. So that does give some optimism. But of course, everybody's asking how sustainable COVID-0 will be, given how transmissible the Omicron variant is.
And is there something else that policymakers and authorities can do to try and ease that pain?
Well, there are a couple of things going on. We had a big move from the central bank over the weekend when they basically bringing down borrowing costs for first-time house buyers. Now, that's actually addressing what's been the other side of the economic slowdown, which is, of course, the big real estate crunch that hasn't been getting as much attention recently due to the COVID outbreak, but that's been one of the big drags on activity. Now, in terms of what they can do on the other side of the economy, the PBOC actually skipped an opportunity to bring down its one-year lending, a money market rate today called a one-year lending rate. They didn't bother to do that because there's enough money in the financial system that won't go towards helping the real economy. But there was a signal from President Xi Jinping. He gave a speech in December at a work conference about the critical importance of taking risks out of the economy and making sure there are jobs for everybody. Well, that speech in December surfaced in the press today, and again the interpretation is that policymakers are certainly keen that the real economy needs help, and that's why more measures will be expected on the spending side of things, I think, over the coming weeks and months.